Hello students and welcome to an explanation on government grants together with assets. So this question focuses mainly on asset-based grants, but it also contains a bit where they want you to do calculations for subsidies. So the question says Spectacular is a non-profit organization situated in Rustenburg. The entity specializes in assisting students from low-income households to obtain reading glasses for free. The initiative started when its director, Dr. Wendy Hatfield, an optometrist, noticed that the academic results of students in the surrounding areas were negatively impacted by impaired eyesight. The organization was established in 2010 and has provided over 5,000 students from local schools with free eyesight testing and glasses. The Department of Basic Education, referred to as the Department, is keenly aware of the work done by Spectacular and has offered funding to the organization to enable it to prolong its work. The following funding applies. So the first type of funding is a minibus. It says Dr. Hatfield travels to different schools in the area to perform eyesight testing on the school premises. Due to the nature of this undertaking, she travels with her medical equipment. Her current motor vehicle has very limited space and she often runs the risk of damaging her equipment when everything is packed to a tight squeeze. The department paid 800,000 Rand in cash to the organization to enable Dr. Hatfield to buy a new spacious Volkswagen Combi. The money was paid to the entity's account on 1 August 2021 and Dr. Hatfield purchased this combi on the same day. All right, so here we have a typical monetary asset-based funding type where you get cash or the organization gets cash from the government, but you are obliged to buy a specific asset with this funding. Then funding type 2 is medical equipment. In the medical field, technology is ever changing. In order to keep up with new testing methods and technology, the department gifted Spectacular brand new optometry equipment worth 120,000 Rand. Dr. Hatfield received the new equipment on 1 September 2021. So here we typically have, again, a government grant that is asset-based. However, now it's non-monetary because you would find that they gifted her the actual asset instead of giving her money to go and buy the asset. Then funding type 3 is traveling cost. It says, in order to ensure that Dr. Hatfield can travel from school to school, the department provided Spectacular with a subsidy of 12,000 Rand to cover petrol expenses. The subsidy should cover expenses for at least 12 months. The subsidy was received on 1 September 2021, and for the year ended 28 February 2022, petrol expenses totaled 13,500 Rand. Then they provide you with the accounting policies. It is said that motor vehicles are measured using the cost model in terms of IAS 16. Depreciation is provided on a straight line method over 5 years and a residual value of 80,000 Rand applies. Equipment is measured using the cost model and written off on a straight line basis over 7 years. No residual value applies. Both monetary and non-monetary asset-based government grants are recognized as deferred income and written off over the lifespan of the associated asset. Government subsidies are recognized as deferred income and written off against the associated expense. In the required part, they ask you in A to construct the general journal entries as it relates to the government subsidy for the year ended 28 February 2022. In B, they ask you to do the general journal entries that relates to the monetary government asset-based government grant for the same year end, 28 February 2022. And then in C, you need to construct the general journal entries that are that relate to the non-monetary government asset-based grant. Let's just try to say that again, a non-monetary government asset-based grant for the year ended 28 February 2022. Right. So in order to answer this, we're going to start with A, and that one asks us to do the journal entries for the subsidy. So you would see that the subsidy relates to petrol expenses. It is funding type number 3. And here we receive a subsidy worth 12,000 Rand. So for number A, I'm going to recognize on 1 September 2021 that we receive this money of 12,000 Rand. So I'm going to increase the bank account and I am going to credit deferred income because that is the instruction per the accounting policies. If we look at the question, it says, government subsidies are recognized as deferred income and written off against the associated expense. So the associated expense here would, of course, be your petrol expenses. And the amount for the subsidy was 12,000 Rand. It's very important to notice that it should be used for 12 months. The question says it should cover, let me just go back, so should cover at least 12 months. That is very important information that we have there. Then on the last day of the financial year, it will be 28 February 2022. They have told us that the petrol expenses for the year was 13,500. So I'm going to say petrol expenses, and then we are not sure if it was all paid for in cash, if it's still owed. So it can either be bank or creditor, and it's 13,500 Rand. Then we need to go and write off the deferred income, and we need to write it off against the associated expense, which is petrol expenses. So we're going to say for the deferred income, we're going to have now a debit entry, and it's going to be paid off against the petrol expenses. What is important is to remember that this 12,000 is supposed to be for 12 months. However, the months we only received this travel cost subsidy on 1 September 2021. So I'm going to count September, October, November, December, January, February. We only had it for 6 months. So I need to adjust it for 6 months, which is half a year. And I'm guessing that should give you 6,000. So please note, students have an inclination to just go and write off the entire subsidy. So they just put the 12,000 against the petrol expenses because the petrol expenses exceed 12,000 Rand. That is not correct. You need to look at the date that this subsidy was received. Right, that's it for number A. That is nice and straightforward. Let's move on to number B. For required B, they ask us to do the general journal entries for the monetary government asset-based grant. So this would be where we get money to buy the combi. So this is the monetary because they tell us that we get 800,000 Rand in cash, but then Dr. Hatfield has to buy a combi with this money. So here I'm now going to say for B, I am recognizing on, let me just check the date on which we received this cash. They tell us that it is on 1 August 2021. So for 1 August 2021, we receive cash from the department, 800,000 Rand. So I'm going to put it in my bank account and I'm going to put it against deferred income. Why do I put it against deferred income? Because this is the policy. This is what we are told to do. If we go to non-monetary and monetary grants, need to be listed as deferred income. All right, so the total is 800,000, and then they tell us on the same day we need to buy the combi. So we're going to increase the motor vehicle account, of course, assets, and we're going to take the money out of the bank to pay for this combi, 800,000 Rand. Righto. So that is the day on which we receive the money and buy the combi. When the year end strikes, which is 28 February, now we need to go and account for depreciation, and we need to go and transfer deferred income, a bit of the deferred income, to profit and loss. So for the depreciation, I'm going to debit depreciation, and I am going to credit accumulated depreciation on motor vehicles. I need to go and do my calculation. If I look at my policy, they tell me that motor vehicles are written off over 5 years and it has a residual value of 80,000 Rand. So I will take my 800,000 Rand minus the 80,000 residual, divided by 5 years, and now we need to go and count for the months that we have used this asset. So we received it, or we purchased it on 1 August. So it's going to be August, September, October, November, December, January, February. That should be 7 months. If I calculate that depreciation, 800,000 minus 80,000 divided by the 5 years times 7 months, I get 84,000 Rand of depreciation. I also at year end need to go and take a bit of the deferred income and move it to government grant income, profit and loss. So I'm going to debit my deferred income and I'm going to credit government grant income, and this is a profit and loss account. So here you are going to take a bit of money, move it to profit and loss, and it's going to be listed as other income in your statement of profit or loss and other comprehensive income. So here we need to take the deferred income, which was 800,000, it's this amount, divided by 5 years times 7 months. And I will not minus the 80,000 because residual value will only apply to an asset, because the residual value basically means after 5 years we can sell it for 80,000 Rand, but you can't sell a deferred income to anyone, so residual values do not apply to deferred income. However, we need to write it off, as the question states, for it to be in line with the associated asset. So the associated asset is used for 5 years and it's been in use for 7 months. So here I'm going to take my 800,000 divided by 5 times 7 months. And I just want to round my figures to 2 decimal places. The question does instruct us to do that at the very bottom. Please round figures to 2 decimal places. Alright, and that is basically the entries that would have been done for the monetary grant that is asset-based. In number C, we have a grant that is now non-monetary, right? So this means that they have given us the equipment. They didn't give us cash to buy it. So the equipment was given to us, I believe, if I look at the question, it's given to us on 1 September. And we're going to say we increase the asset, medical equipment, and we write it against deferred income because this is the policy. And the market value of that equipment is 120,000. So I need to debit and credit the correct account. Again, by year end, we now have to measure depreciation on the equipment, and we now need to take a bit of the deferred income and move it to government grant income. So on the last day, which is 28 February 2022, we're going to have depreciation and accumulated depreciation on the medical equipment. And they say that it has a lifespan of 7 years without any residual value. We've used it since 1 September, so we will argue that it was used for 6 months in the current financial year. And that gives us depreciation of 8,571 and 43 cents when we round it to 2 decimals. Right, then we still have to write off a bit of the deferred income. So I'm just going to copy these entries because we still have to debit deferred income and move a bit of the deferred income to government grant income. So here we're going to say it's 120,000 Rand. There's no residual value, so it's divided by 7 times 6 out of 12 because we need to write off the deferred income for it to be in line with the associated asset, which is medical equipment. And that should give you the exact same answer as depreciation. And those were the journal entries that you should have done for the asset-based grants as well as the subsidies. I think it's quite simple and straightforward once you understand how the deferred income needs to be transferred to government grant income. And please remember that the government grant income is a profit and loss account that is listed as other income. All right, I hope that you've enjoyed this video. Please send me any questions that you might have and that I can assist with. But until I hear from you, please stay busy with government grants.